On the exact day of April 6th, 2026, a most insane paradox in modern financial history occurred. The benchmark Brent crude oil price crossed the threshold of $110 a barrel due to the risk of a blockade in the Strait of Hormuz. However, in the Asian region, Japan's Nikkei 225 index actually rose by 1.1%, and South Korea's Kospi increased by 1.5%. Welcome to Prism News. I am here to dissect for you exactly why those boring numbers on the electronic board are currently dictating the lives of tens of millions of people in the Middle East rather than the diplomats. The truth is, the world economy is not operating the way you think it is. When the United States and Iran were on the brink of a full-scale conflict, the US president suddenly announced a 10-day delay for the attack deadline. On the surface, that was a diplomatic move. But the Wall Street Journal and internal reports from the Federal Reserve have exposed a completely different cause. That is, the yield on the US 10-year Treasury bond spiked to 4.43%, a lethal interest rate level. The Wall Street algorithms issued a panic signal. When bond yields rise too fast, the borrowing costs of the United States swell to the point where the domestic banking system risks collapsing before the very first missile can even be launched. Financial dominance has tied the hands of the military elite. What do you think about a line of trading code having the power to stop a war? Leave your thoughts in the comments below, because this leads us to a much darker secret happening right inside your wallet. If you think delaying the war will save the economy, you are mistaken. Let us look at what is truly happening in the world's largest labor market. In early April, mainstream media simultaneously celebrated the figure of 178,000 new jobs created in March. It sounds like the economy is booming, right? But PrismNews does not read reports that have been painted pink. We turn to the appendix pages at the back. In reality, the raw data indicates that the core economy has seen a net loss of 202,000 jobs since January 2025. If we exclude the healthcare sector, which is heavily subsidized by the government, in February alone, 92,000 jobs vanished into thin air. We are entering a brutal era called jobless expansion. Massive corporations are reaping record profits, and the energy sector's profit margins are projected to increase by another 10% this year. But they are not hiring more people. They use artificial intelligence and automation systems to replace thousands of middle-class positions. Gas prices nearing $4 a gallon are squeezing the purchasing power of the working class. This is not a recession, this is a massive wealth transfer. If you are working in administrative or basic service sectors, can you feel this elimination? This cruel divergence leads us to a concept that the financial elite are whispering behind the closed doors of investment funds. They call it the TACO effect. Whenever the stock market falls into a deep correction zone, such as the recent 2.4% drop in the Nasdaq index, policymakers will immediately back away from hardline geopolitical decisions. Why is that? Because the modern financial system is incredibly fragile. It is built on a massive mountain of debt and financial leverage. In the past, a nation projected its power through the number of aircraft carriers it had. Today, true power lies in the ability to absorb a liquidity shock. When the Strait of Hormuz is threatened, maritime insurance premiums skyrocket. The algorithms of quantitative funds do not care about patriotism. They simply scan for risk keywords and automatically sell off billions of dollars in assets in a millisecond. This forces politicians to compromise. The war does not disappear, it merely shifts from the front line of bullets to the front line of exchange rate manipulation and capital flows. And on this front line, the most vulnerable are the ones who pay the heaviest price. Coming up next, I will reveal to you how smart capital is exploiting this volatility to erode the wallets of small and medium enterprises. In a macro environment clouded by panic, there is an invisible trap swallowing the cash flows of the world. Bloomberg News recently published a sharp analysis of what is known as the market slippage trap. Imagine a business that must continuously import raw materials. To avoid exchange rate risks caused by war volatility, they buy foreign exchange forward contracts. In peacetime, this is textbook risk management. But April 2026 is not peacetime. With oil prices fluctuating with massive margins following every statement from world leaders, automatically rolling forward contracts manually has become a poison pill. Every time a contract is closed, the widening exchange rate spread bites off a chunk of profit. This slippage acts as a stealth tax. To survive, major corporations have abandoned humans in the treasury management process. They have shifted to operate by exception methods. Artificial intelligence systems automate all real-time risk hedging, and humans only intervene when there is a system failure. This fierce race reveals one truth: if you or your company react to the market at human speed, you have already lost to the machines. So what must countries without this cutting-edge financial technology do to survive? The answer lies in the global south. While the West and Asia are panicking to find escort ships to protect oil supply routes, there is one country calmly standing outside this inflation vortex. That is Brazil. Their supply chain decoupling is an expensive lesson that PrismNews wants to analyze deeply for you. For decades, Brazil has quietly built an invisible macro shield. Tens of millions of drivers there can flexibly switch to using 100% sugarcane ethanol or gasoline blended with 30% biofuel. When Brent crude oil prices exploded, their core inflation was not blown away like other energy-dependent nations. This is not luck, this is a long-term energy autonomy strategy. At the same time, Arab nations in the Gulf Cooperation Council are realizing that Western security umbrellas bring too many risks. They are negotiating to build a decentralized regional security architecture. The world is officially entering the era of deglobalization. The reliance on the dollar and monopolized logistics systems is being broken from the inside. Do you live in a country dependent on imports or one with self-sustaining resources? That position will determine your cost of living in the next decade. To better understand the uncertainty of the global economy, let us look up at the sky. In early April, the Artemis II mission of the American Space Agency sent 4 astronauts orbiting behind the moon. For exactly 40 minutes, all communication signals with Earth were completely cut off. This space blind spot is the most perfect metaphor for our current financial system. Central banks and investors are also navigating in a massive blind spot. Traditional economic models have broken down. Not just in America, but technological disruption is spreading everywhere. In Wuhan, the Apollo Go robotaxi system from Baidu experienced a connectivity failure paralyzing local traffic. The current economy relies too heavily on massive digital infrastructure networks yet lacks elasticity. When a single bottleneck is broken, the entire supply chain collapses in a domino effect. We are trading stability for maximum efficiency. And when a crisis hits, there is no one on the other end of the line to answer the distress signal of the consumer. If the economy is wavering this much, why do you not see corresponding panic in the headlines? That is because the media ecosystem has been fragmented and subtly manipulated. Scanning the news spectrum of April 6th, PrismNews noticed an incredibly terrifying cognitive framing strategy. Major television networks like ABC News continuously report on a pilot rescue mission or epic space events. They are applying a tactical myopia strategy, deflecting public attention away from the stagnation of inflation. Meanwhile, survivalist podcast channels inject extreme fear, urging audiences to hoard physical assets and isolate themselves. This fragmentation makes society unable to agree on the nature of the crisis. You cannot demand leaders to solve inflation if half the population believes inflation is due to natural shortages and the other half believes it is an elite conspiracy. Controlling information is now as important as controlling oil wells. Which news source are you putting your trust in? Be careful, because the recommendation algorithms of social media are trapping you in echo chambers designed to serve corporate interests. All of these fractures ultimately converge at one single point: the chair of the Federal Reserve. Facing oil prices above $110 cost push, inflation pressures are seeping into every commodity. The decision to keep interest rates unchanged is not caution, it is paralysis. If they raise interest rates to crush inflation, they will smash the real estate market and push countless small businesses into bankruptcy amid already dangerously high bond yields. If they cut interest rates to salvage the drop in core jobs, they will ignite a hyperinflation bomb. The most powerful authority in the world is forced to stand still, hoping for a diplomatic miracle in the 10-day countdown. For the audience of PrismNews, this is the time you must change your investment mindset. Stay away from businesses dependent on a single global supply chain. Focus on value-storing assets that cannot be diluted, and clearly recognize the technology trap directly threatening the value of your labor. The era of artificial stability has ended, and understanding the true nature of cash flow is the only shield protecting you in the upcoming supercycle. Thank you for tuning in to the in-depth macro report on PrismNews. Hit subscribe so you do not miss our uncompromising analysis in the future.